Mexico's tariff hike sparks tension. China asserts right to retaliate. New chapter in global trade tensions is unfolding, as Mexico has imposed steep tariffs on Chinese goods and other imports from countries without free trade agreements. In response, China has clearly stated that it reserves the full right to take countermeasures to protect its interests. The dispute highlights the ongoing ripple effects of US-China trade frictions, with Mexico caught in the middle and appearing to align more closely with American pressures. What happened? In December 2025, Mexico's Congress approved a major overhaul of its customs law and tariff structure. Effective from January 1, 2026, the new measures significantly raise import duties on over 400 products from nations that do not have a free trade agreement (FTA) with Mexico. These include China, India, Vietnam, and several other Asian economies. The tariffs mostly range up to 35%, with some reaching as high as 50% depending on the product category. Affected goods include automobiles and auto parts, electronics, steel, textiles, plastics, furniture, clothing, and appliances. China, as Mexico's second-largest trading partner after the United States, stands to be hit hardest, with billions of dollars in exports now facing higher costs. Mexican officials describe the move as necessary to protect domestic industries under the Hecho en Mexico, Made in Mexico initiative, reduce the trade deficit with China, and boost local manufacturing. However, many analysts view it as a direct response to pressure from the United States, which has accused China of using Mexico as a backdoor to bypass US tariffs on Chinese products. China's strong response. China's Ministry of Commerce reacted firmly. Even before the tariffs took effect, Beijing warned Mexico to think twice and described the action as unilateralism and protectionism that harms bilateral trade. In its latest statement, China declared, Mexico's unilateral measures constitute barriers to trade and investment. China has the full right to take appropriate countermeasures in response. We will safeguard our legitimate rights and interests with necessary steps. So far, China has not announced specific retaliatory tariffs, but it has completed investigations into Mexico's trade barriers and held direct talks with Mexican officials in February 2026. The tone from Beijing remains measured yet resolute, signaling that further action could come if the situation escalates. Broader context and implications. This development is closely tied to the wider US-China trade war. The United States, under President Donald Trump, has repeatedly raised tariffs on Chinese imports and pushed allies like Mexico to tighten controls on Chinese goods entering the North American market. Mexico's membership in the USMCA trade agreement adds another layer, as a review of that pact is approaching. For Mexico, the tariffs may offer short-term protection for local factories and help address concerns about Chinese companies routing products through Mexico to reach the US market. In the longer term, however, reduced Chinese investment and higher costs for consumers and businesses could create challenges. For China, while exports to Mexico will face pressure, Beijing can redirect shipments to other markets. Potential Chinese retaliation might target Mexican exports such as avocados, tequila, beer, or auto parts, adding fresh strain to bilateral relations. Globally, the move risks disrupting supply chains at a time when the world economy is already dealing with inflation, geopolitical uncertainties, and trade fragmentation. Developing countries, including Pakistan, may need to reassess their own export strategies in textiles, electronics, and other sectors if broader trade wars intensify. What lies ahead? The situation remains in the negotiation phase, but the risk of escalation is real. Both sides have kept channels open. Yet China's firm language indicates it will not simply accept the new barriers without response. This episode serves as a reminder of how quickly trade policies can shift in today's interconnected world. One nation's decision to raise tariffs can trigger chain reactions that affect economies far beyond its borders. If you would like more details on specific products affected, potential impacts on Pakistan, or the latest updates on this story, feel free to ask. The trade friction is still evolving.
Thanks for watching International Trade Talk, where we simplify global trade and business insights for you.
If you enjoyed this video, don't forget to like, subscribe, and turn on the notification bell.
Watch our next video to stay updated with the latest global trade trends and market insights. See you in the next episode of International Trade Talk.